Hello friends, we have all done it. You watch a finance video, you get super motivated, you vow to invest $500 this month, and then your car breaks down, or you see a sale online, or rent goes up, and suddenly your investing plan is gone. Or maybe you are like me back in 2022. I saved up 2 grand, the market dropped a few percent, and I panicked. I told myself I will just wait for it to drop a little lower before I buy in. Spoiler alert. I missed the absolute bottom. The market rocketed back up and I was left sitting in cash, making $0. What if I told you that the wealthiest investors in the world don't rely on motivation? And they definitely don't try to time the market. I finally stopped trying to outsmart everyone and I built a robot. A simple, invisible system that buys my favorite ETFs for me every single month, whether I'm sleeping, working, or on vacation. Today, I'm going to show you exactly how to build the same one. But first, a quick disclaimer. As always, this is not a financial advice, just educational content to help you think through investing ideas. Always do your own research. I wish you good luck. Alright, let's talk about the single biggest lie in personal finance. I will invest whatever money I have left over at the end of the month. If you are a normal human being like me, there is never money left over at the end of the month. That's why the golden rule of wealth building is to pay yourself first. I repeat, pay yourself first. You don't hope you have money left over. You treat your investment contribution like a mandatory utility bill. The electricity gets paid, the rent gets paid, and the future you gets paid as well. Non-negotiable. But willpower is a finite resource. If you have to manually log into your brokerage account on the first of every month, stare at the blinking red and green numbers, and click buy, eventually human emotions takes over. Automation removes this emotion. And this brings us to the mathematical superpower behind automating your investments. It's a concept called dollar cost averaging or DCA. And it is the absolute best defense mechanism against a crashing stock market. Here is how it works. Let's say you automate a $500 investment on the 15th of every single month into an ETF like VOO. In month 1, the market is doing great. VOO cost $500 a share. Your automated system buys exactly 1 share. You feel good. But in month 2, the economy panics. The market crashes. Suddenly, VOO drops all the way down to $250 a share. A normal investor would panic and pass their investments. Not your robot. Your system takes the same $500, but because the price crashed, it automatically buys 2 shares instead of 1. You didn't have to guess when the market hit the bottom like I tried to do. You naturally bought more shares when they were cheap and fewer shares when they were expensive. By sticking to this automated schedule, your average cost per share drops. And when the market inevitably recovers, your portfolio explodes in value because you bought the dip on autopilot. Now, practically speaking, how do you actually set this up? You need a brokerage account that supports 2 critical features: recurring investments and fractional shares. Without fractional shares, you can't automatically invest a flat dollar amount like $100. If you are in the US, you have phenomenal options. Robinhood pioneered the clean, simple recurring investment interface. Moomoo offers fantastic advanced automation tools and data. And if you prefer a legacy titan, Fidelity recently started allowing automated fractional ETF purchase. Any of these 3 will let you build the system for 0 fees. And I didn't forget about you, Canada. Up north, your absolute best bet for this is securely Wealthsimple. They offer totally free recurring buys and fractional shares on major ETFs. Another great option is Questrade, using passive to automate the purchases. Whichever app you choose, the setup takes less than 5 minutes. Let's walk through the actual setup I use. Step 1. Link your primary checking account. This is crucial. Do not link a secondary savings account that you might drain. You want the money pulled straight out from where your paycheck lands before you ever see it or have a chance to spend it on Uber Eats. Step 2. Pick the exact date. My golden rule: schedule the auto invest for the day after your payday. If you get paid on the 1st and the 15th, set your brokerage to automatically pull the cash on the 2nd and the 16th. By doing this, you instantly adapt to living on slightly less income and you build wealth invisibly. Step 3. Choose your ETFs. If you watched our last video, you know we love the basic 3 ETF portfolio. VOO for foundation, SCHD for passive income, and QQQM for tech growth. In your brokerage app, you literally just click recurring, select the ETF, and type in however much you want. For example, if your goal is $400 a month, you could set up 3 separate recurring rules: a rule to buy $200 of VOO every month, a rule for $100 of SCHD, and a rule for $100 of QQQM. Hit confirm and you are officially a systematic investor. You don't have to look at the stock market ever again if you don't want to. Now, I need to be brutally honest with you. Implementing the system is very easy. Keeping it running is really hard. In your first year doing this, there will be months where the stock market drops and you log in and you actually have less money than you put in. That is the exact moment I used to break. I would log in, cancel the recurring transfer, and say, I will just let things calm down. Do not do this. As we proved with the dollar cost averaging math earlier, those blood red months are exactly when your automated system is doing its most powerful work, buying stocks on clearance. Wealth building is incredibly boring. It is a slow, methodical grind of putting $100, $500, or $1,000 away every single month for decades. But if you have patience and you let the machine do its job, the math takes over. And that is exactly how you put your financial future on autopilot. Pick your broker, set the date right after payday, pick your simple ETFs, and literally forget your password. If this setup guide helped you, do me a favor and smash the like button so this video can reach more people who need to get off the sideline. And hit subscribe because next week we are diving deep into the dividend snowball, the exact math of how to make your portfolio pay your rent. I will also leave links to all the best brokerages we talked about in the pinned comments. And finally, one last reminder. As always, this is not a financial advice, just educational content to help you think through investing ideas. Always do your own research. I wish you good luck. Keep stacking, set your robots up, and I will see you in the next one.